Hello and welcome, dear traders and investors. I'm glad to present you the cryptocurrency market review presented by analysts and experts from fx.co portal. Here we go. Bitcoin has been tracing a kind of upward move that is merely correction for 2 months. This is clearly visible on the daily time frame. The liquidity pool below remains untouched, and the price is likely to revisit it with roughly a 90% probability. We believe market makers' manipulation are possible in the near term to convince traders that a new upward has begun. Meanwhile, BitMEX CEO Arthur Hayes said that Bitcoin's price depends not on the central bank policy pursued, but on the overall money supply. It is worth recalling that the last major uptrend formed after the pandemic, when central banks printed tens and hundreds of billions of dollars, euros, and other currencies, and markets began to expect monetary easing. Hayes' view is logical. The more money in the economy, the cheaper it becomes and the more capital flows into various assets. But are central banks going to start the printing presses again anytime soon? Under what circumstances would central bank begin to print money? The war in Iran will not change the monetary policy approach of the major regulators. The global economy may slow, but unlikely enough to prompt new large. Expanding the money supply would rather stoke inflation, while central banks are already expecting strong consumer price growth in the coming months. March CPI readings have already confirmed that hypothesis. Thus, the talk is more likely about tightening monetary policy, higher rates and a reduced money supply to curb price growth. The ECB, the Bank of England and the Fed have already identified their primary task for 2026: prevent inflation from getting out of control. Therefore, money supply growth is unlikely in the near term. Bitcoin remains a risky investment asset in a bearish trend and having lost about 50% of its value in the last 6 months. Investors remember that every Bitcoin bull run has ended with a 70–80% crash. On the daily time frame, Bitcoin continues to form a downward trend. The trend structure is identified as bearish, and the CHOCH line currently at the level of 97,900 USD. Only above this level can it be considered that the downward trend has ended. The current target for the downward trend remains nearly at 57,500 USD, corresponding to the 61% Fibonacci retracement level. Given no signs of a trend reversal to the upside, we believe the decline will continue. On the daily time frame, the nearest area of interest, point of interest, for new sell trades is the range of 79,500 and 81,100 USD. Additionally, about a week ago, another bearish FVG formed, with a preliminary withdrawal of selling liquidity, and the price even reacted to it. However, on the 4-hour time frame, the probability of a sideways trend remains high throughout this period. On the 4-hour time frame, the price has dropped to the lower boundary of the sideways channel, formed a deviation, bounced from it, and may now rise again. The CHOCH line which provides support for the upward correction, is at 65,500 USD. Breaking this line will mark the end of a month-and-a-half long correction. During the latest phase of the decline, two new bearish FEGs were formed. But if the flat continues, the internal patterns hold no significance. On the daily timeframe, Ethereum continues to form a downtrend. There are three bearish patterns, all of them FEGs, which can be used as a potential areas for future short entries. However, despite a month and a half of correction, Ethereum has not even reached the nearest one. The closest FSG is located in the 2,480 USD, 2,630 zone, and this is the key area of interest for traders. The CHOCH level stands at 33.95, marking the last lower high. As long as the price remains below this level, the downtrend remains intact. On the 4-hour timeframe, price broke out of the range and briefly formed what was looking an upward trend, but it faded very quickly. In a strong downtrend, any upside move should be treated as a correction by default. The past month and a half has clearly shown how difficult it is to trade these corrective moves. Below the trend line, as we see on the green line, lie the key targets for market makers, which is why we remain confident that the broader downtrend will continue. On the 4-hour chart, the only relevant POEs are the last three bearish FEGs. With the most recent one being fulfilled yesterday, the reaction from this area could trigger another leg lower. That's all for today. See you online soon and good luck.